Good morning. Today we're going to look at UK inflation, which is really important given that we've got the Bank of England meeting tomorrow. This morning we had the latest UK inflation report, very important for the Bank of England, and as we look ahead to the Bank of England's meeting tomorrow, where they'll be deciding whether to change interest rates. The report was actually encouraging. Headline inflation remained at 2.2% year on year, and actually that's slightly below the Bank of England's current forecast of 2.3% and is just marginally higher to the long-term inflation target the Bank of England sets of 2%. So a headline, a pleasing result. It's important to look at different aspects of the inflation report. One aspect we look at is something called core inflation. This excludes more volatile components such as energy and food. Core inflation actually rose a little bit from 3.3% to 3.6%. Part of the challenge for the Bank of England, and why they've been a little bit more patient and hesitant to cutting interest rates to a greater degree so far, is the services inflation. And we can see this on the chart in front of you. If you can focus on the red line, you can see that service inflation has been gradually coming down, but it's still pretty high relative to historic levels and has been quite frustrating for the Bank of England. So when we look at services inflation for this month, we can see a slight tick up from 5.2% to 5.6%, but this was expected and is expected to be temporary. When we look at the individual components contributing to inflation, we can see an upward contribution from airfares. That was pretty strong, but also recreation and transportation. And then on a downward contribution, that was really coming from motor fuels, where we saw the average price of petrol falling 2.1 pence per litre in the month of August. So tomorrow we've got the Bank of England meeting. Expectations are that they won't change interest rates. But the inflation report today does suggest that they can cut interest rates in the coming months, and that's what the markets are expecting. But the markets will be fully focused today on the Federal Reserve meeting, the US Central Bank, where there's 100% confidence within the markets that they'll cut interest rates. But the question is, to what extent? Will it be a 0.5% cut or 0.25% cut? They'll be making their judgment on the US economy, the strength of labour markets and inflation. Yesterday we had data on the US consumer, on US retail sales. They were actually pretty encouraging, coming in at 0.1% on the month, better than the minus 0.2% expected. Suggests that the consumer is still spending and the US economy is in good shape, which just may mean that the Federal Reserve cuts by 0.25% today. But we will find out, and we'll keep you up to speed in tomorrow's morning markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.